Yeah, this is gold 1 hour. So now, now looking at, let's go to, let me start from weekly. Oh, now currently now, gold is on the gold has made all-time highs. If you trade gold, you've been trading gold on your demo bar.
Mm.
Look at gold made all-time high. Gold reached 2,532 per ounce. So it's probably retracing now. You see? Probably retracing. So now you can see that gold presently is so bullish based on the, do you know what moves gold?
Mm-mm.
Geopolitical tension. Whenever there is global uncertainty, whenever there is war,
Mm-hmm.
investors, gold is a safe haven asset. So investors sell off their currency and buy gold and store their money on gold. So as a result of that, gold skyrockets. And anytime there is uncertainty, anytime whether they fight war for Iran or all those things, oil, gold,
Yeah.
USD, all of them skyrocket. So as you can see now, gold is bullish. Maybe looking at it, you can understand that gold is bullish. After breaking all this time high, yeah, gold made a little retracement around this area. And
Okay. This monthly chart.
yeah, this is monthly chart. So since the time gold broke this guy here, gold has been just trending up without any retracement to show you
Yeah. But I
how
think it's about to retrace.
we don't know yet. This is a new month. So you see, just making a bottom wick to continue up. But there is still war
Okay.
now. There's still war with Israel and Gaza, all this Iran.
Yeah. Even Ukraine.
Yes, even Ukraine and Russia. So that's why gold has been pumping, pumping, pumping. So you see. Now, since then, God have not retraced because this is the guy that sponsored the break of structure to the upside. But since then, even after our class, I'll still mentor you on how to scalp gold. Understand? I'll mentor you at least you will be perfect in like one, two, or three pairs, at least highest three pairs, but minimum is two. Either USD, Euro USD or gold Euro USD or any other pair that you can choose. But
Okay. Makes sense.
before I mentor your gold is very volatile, you understand? It's not something
Mm.
that you just rush into. Gold is very volatile. Small this thing like this can have many pips stop loss. Small candle like this can have up to 100 pips. Understand? So it's very volatile. So now this is me looking at this, and this is monthly time frame. Now let's go down to, we are trying to know the market structure of this of gold. You are trying to identify the market. We have identified that the gold is bullish, but let's just point down the market structures, identifying the zones, the areas that
Mm.
cause breaks, and the value zone that we can work with on the lower time when we scale down to lower time frame. Now weekly. Let's go down to weekly. Yeah, this is weekly time frame. You can see that this guy here tapped this guy. This guy mitigated this guy after breaking this minor internal structure. This is an internal structure. See?
Okay.
Instead of this guy is supposed to reach this guy here. But due to this place is also a valid zone. This is a valid
You did
PR.
not break it. Yeah.
Now break it. Came here and reacted here. That's one thing about gold. Every zone is a valid zone when it comes to gold. Every zone is a valid zone, provided it broke structure and grab liquidity. Every
Yeah.
is a valid zone. You see? What am I? Hmm. So this guy here presently broke this structure here. and came down. So since the time that this guy shoot up, price never retrace. Price has been doing what? Bullish on gold.
Mm.
But you see how easily I spot all these zones and engage them. Understand? Price
Yeah.
has been bullish. Price made a little retracement, clearing all these. This is a liquidity. Price cleared all this internal liquidity here and tap into this POI, into this zone, into this demand zone. Price tap into this demand zone and did what? Shoot up. But if you look closely, see that price did not break this guy immediately. Price came here and reacted and went back to this guy before doing what? Before breaking it.
Yeah.
So now this scenario that happened here is what is called flip zone. Demand to supply flip zone. I will also explain. I've explained flip zone before, but in later days I will explain it back and also valid and this POIs them. So now
Okay.
you see that gold, instead of gold to break this guy immediately, came there, reacted, came back to this guy before doing what? Breaking it.
Breaking it. Yeah.
Yes. So now gold have not reached this guy yet. But how do we trade gold? We don't trade gold based on the higher time frame. We trade gold based on from that daily perspective to down to 1 minute because of how volatile gold is. But let us continue
Mm.
going down. I will tell you, I will show you all those things now. Let us continue going down to daily. Yeah, this is daily time frame. So as a gold trader, we will not continue to wait until gold reaches this area. We follow
Mm.
on how gold has been behaving. Now you can see that there was a break of structure here.
Mm.
And this is the guy that caused the break of structure. You see? You can also see there was a break of structure there. And this was the guy that caused the break of structure here. This was a valid zone. This guy is also a valid zone, but price is not reached here. You see? See that this guy broke structure. This guy was the cause. But there was a flip zone here. This guy also reacted before breaking. So you see how this guy came and tapped it. This guy came down and tapped this area. I'm just trying to let
Mm.
you understand how you can trace
Well, I'm trying to
area.
look. How do you easily identify the guy that caused that break of structure?
Is by experience. Look at it. This is, I told you, a demand zone or whenever there is a break of structure here,
Mm-hmm.
maybe this is a bearish trend. See, just price is going like this. Now, this is the last bearish candle before this bullish candle. You see, before this bullish candle. Now you see that this structure has been broken.
Mm-hmm.
This structure has been broken. Now, this is
Mm.
the last bearish candle before this bullish candle started forming. So now this is
No,
that.
no, that is the bullish candle now. This is the last.
Yes, now this is a low. This is a down candle, down candle, down candle.
Yes,
Now this is the
yes.
last bearish candle before this bullish one started forming.
Okay, okay, okay.
You see, so that if you want to draw out your POI, this is you take all this guy here to here. This is your PO. That last down when it comes to demand or when it comes to bearish PO, bullish POI, that last down
Mm.
candle, that last
It,
bearish candle before a bullish
it has to
candle.
be. It has to be red now.
Yes, now this is the color now I use. Let me
I
change.
know. I'm just asking you. Like it has to be red now. Yeah.
Yes, yes, it has to be.
Okay.
You see. So that is the same thing with all these guys here.
I get. Yeah.
So that is it. This last red candle, you see that the red was coming down before this bullish
Mm.
candle. So if you want to draw your POI, you know that that's the guy. That's the last red candle. This is a POI.
Okay.
You see him.
I get.
And it caused a break of structure. This is also a break of structure. You see? So that is it.
Yeah.
That last red candle before a bullish run. And when it comes to
Mm.
bearish, that last bullish candle
Bullish.
before the just as
The
it is.
bear. Yeah.
Now let's go down to
Makes
4
makes sense.
now. Sleep, don't worry. I don't wanna stress. Now,
Let's.
you see?
No, no way. Continue.
Now, since we are working with gold, now if you look at this area, since gold tapped here, gold has failed to take out this guy. This is the last high before this low was made. Gold has failed to take out this guy, and this guy was the new high gold made. You see? So now, since gold has failed to take out this guy, and gold have been ranging here, and also has failed to take out this guy. You see? So see how gold came back and reacted here and it's going up. So now we are completely ranging inside this price. Price is inside range here. But that doesn't mean that we will have a lot of we will get a lot of trade here. Hence it has to do with gold. Gold will give you a lot of opportunities here, but how will you
Yeah.
do it without falling a trap?
Mm.
Without falling a trap. That means you have to, if you want to buy, you have to wait until the price reacts inside from this zone.
Because all these things just consolidating.
Yes, you don't have to take any trade inside this middle. If you want to
Yeah.
sell, you have to wait until price reacts from this area.
It breaks it or it's
No, if price fail to break, just like see, price broke it but failed to continue up.
okay.
Price broke it and reacted and came down. So if you want to look for any sell, you have to look for sell for up here after price took out
Mm.
its buy side liquidity and gave us some one or two things to sell down.
Okay.
So that is it. One thing we go. So now let's
Mm.
go down to 1 hour. You see? So this is 1 hour now. Price reacted from this area. If you're looking for a buy now, we have to wait until price take out this high. If price take out this high, this is a liquidity. Price take out this high
Mm.
on the gold, just like this.
So, but are you saying you can't enter the trade now that it's moving up already?
For you to get this trade, you have to scale down to 1 minute, from five
Okay.
minutes to 1 minute. But look at the best place you would have taken the trade, this area. But
Mm.
see how price has moved. Price have moved almost 2,200 pips. Price have moved almost 200 pips. You see? So that's one thing with gold. Gold moves a lot. It's very volatile. Very volatile. Now see.
Mm.
Come Now,
Why does why does the trading view give all this dash dash dash? I'm saying all this small small.
all this thing.
What does it signify? Yeah, all those dash, all this
Now
small small.
this thing that I'm using an Asian range and this thing, but I'm trying this let me see. You can put it on your own. It gives me something. This all this
What the,
so
what
this
the,
thing is Asian range. Is all these things are swing points. You see, it's a
okay.
swing point. You understand?
So it helps you to trade from there too.
It's not, I don't trade from swing point. It's just what comes with this Asian range future.
Is it?
There's also
Oh.
another one that has Asian range, New York and London range. Whenever there's a
So why do you choose Asia?
because Asian is because I majorly trade in London and New York. So after Asian range, I look for liquidity
Copies.
above or below Asian range and have my trade. I don't. It's not that
Okay.
I trade Asian range. I use Asian range as a liquidity point of view. That's what
Mm.
many people use. Other people also try to identify because by merely Asian range is during the night now. So
Yeah.
I know when London starts. London is during the day, so I know when it starts, so I can easily identify it. I know when New York starts, I
Oh,
can easily identify it. You understand?
okay.
So now this is price reacted from here. You know that now that price have reacted from here, the next place price is going is this high. This is the next place price is good. So now let's go down to 15 minutes and see how we can engage on this price. This 15 minutes. Let's go down to 1 minute, to 5 minutes. You see that after price reacted from that zone that you drew out,
Mm.
that same thing that happens. Price clear this low, broke
Mm-hmm.
this high, came back and tap into that guy that sponsored the break of this high and did what? And
Mm.
change course. And that's the same thing price did. That's what, when we reach to our entry model, that's when I'll take that to teach you all these things. I'll teach you timing. I'll
Mm.
teach you. So now look at what price did. On 5 minutes, price took out this liquidity in 5 minutes. What is price did? Price broke structure here. So now this is the guy that scores the break of structure. We see that price did not actually reach that place. So what did price do? Price came and tapped into, price came and reacted off some guy here before doing what? Before continuing up. So assuming you wanted to take this trade here,
Okay.
if we go down to 1 minute, you can also see an entry. But as far as 5 minutes is concerned, as far as an entry level is concerned on your POI, whenever price comes to your POI, you wait for that same thing that happens on the higher time frame to happen on the lower time frame that you want to take that trade. Maybe on the 5 minutes, maybe on the 1 minute, maybe on the 3 minutes. Wait for price
Mm.
to clear liquidity, clear this low, break this high,
Mm-hmm.
then come back to that guy that sponsored the break of structure and
Mm.
continue up. This is,
But why don't you enter the trade after it clears the low? You just enter the trade to go
we
for
wait
the
for,
buy.
because we are waiting for this is what is called three tick confirmation, break of structure, a liquidity grab, break of structure, and back to your POI. Three tick, three tick formation. Liquidity grab, price grab liquidity here. Price broke structure to the upside.
Mm-hmm.
This is your POI. The guy that caused the break of structure to the upside.
Mm.
You see? So, but this, I'm not actually trying to explain to you entry model. I'm trying to just
Yeah, I get.
see if you can analyze this chart, this gold. If you can
Mm.
analyze gold, try to understand the market structure of gold or any pairs that you have not actually traded. So when you see a pair, I want you to understand how to analyze it. Bring mapping out zones, mapping out break of structure, mapping out liquidities. Because all these things are the vital things that you need to know before you can actually think of trying to engage on a trade. Before you can actually think of engaging on a trade. You see?
Mm.
It's not that hard. It's not that,
Yeah. Continuous practice.
it's not that hard. Price came here. It's not that hard. It's not that hard. It's not that hard. Not that hard.
Mm.
Price is moving from point one from point A to point B, seeking for liquidities, be it external, be it internal. But for you to understand it, you have to trace it structurally. Trace it structurally. This guy reacted from this guy and broke structure to the upside. Now you know that you have gotten a valid guy to work with. You know that you have gotten this guy to work with. This is the guy you have gotten to work with. So in case price did not reach that area, why didn't price reach that area? Price reacted of this fair value gap. Price reacted of this guy after it grabbed Asian low liquidity. After it grabbed Asian low liquidity. Now price wants to start trading up. You go down to lower time frame. If I go down to 3 minutes, this area will not show. If you go down to lower time frame and see if price are giving you that 3-tick confirmation. If price are giving you that 3-tick confirmation for you to have your entry. Know your structure. Know how to identify those your structural order flow. Because market structure is what will lead you. See that after price grabbed this guy here, price rejected it and did what? And you know, some of these moves are influenced by news, all this
Mm.
political news and all those things. So now, this is just it. Can you on your own? I want to bring out another pairs. EU. I want to bring out GU. So that you just look at it and try to draw the structure. You can use this thing that I'm using to draw.
Okay.
You can use it and draw the structures. You can also identify zones, valid zones. Map out those zones, those POIs, those demand zone and supply zones. Map out the liquidities. Try to know the structure that market is currently trending at. Let's use GEG because this is very vital. If you understand it, then we can move to other levels. We can now talk about entry patterns. Those entry systems those ones that will fetch you money. Entry system. Now look at this is GU. Just from this area. Just from this area now. Just trying to analyze this chart. Make an analysis of this chart. Try to know the zones. Map out those zones. Let me share. Okay, this thing will finish in 9 minutes. So after that, I will share another. Let me share my monitor with you. Check if I don't share them.
Okay.
I don't share them. You don't see them back?
Yeah, I think so.
All right.
But
So just go down here.
yeah. I don't think I can access your trading view. I can't touch your trading view.
But you are the one controlling it now.
No, it's you now. Is it me?
You are the one
Is
controlling.
you?
No,
Is you? Okay. Is you? Mimi, is you?
I just but try to. Are you're on your PC, but
Yeah.
I don't share them with you. I don't share clipboard.
Okay, yeah.
Yeah, you can control too.
Think so.
The way your mouse is moving, you can't be like you don't take away. Wait, see what thing I want make you use. Wait, calm down. See what thing I want make you use. Use this one. This one. You see this thing where I move? You see this thing?
Uh,
Use them.
okay.
Use any of them.
Okay.
Select any of them.
So what do you want me to do now?
I just want you to analyze this chart and spot the market structure for me. Spot the market structure, and just want you to make an analysis of this current order flow, this bearish order flow now. I just want you to
Hmm.
make an analysis using these things.
Okay. This should be my point of interest. Yeah. Okay. Yeah.
This market now is bearish. This market now is bearish. This is a bearish market. Understand?
It started going down
This is
from
a
up here.
bearish. As I say, you should start from here.
Okay.
Start from here, now. From this guy. Start from this guy.
Okay.
Down to this guy.
Okay.
Mm. So start from there.
So this is the break of structure. Yeah.
All right.
Break of structure. Oh, why is it?
Liquor.
Okay.
Yeah.
Uh-huh. So this is the guy that sponsored it.
Yes.
Hold on. Let me. Yeah.
Make am be just cover the whole candle. That whole bullish candle before the bearish move. Cover the whole candle. That 1 hour.
Okay.
Cover the whole candle.
Yeah. Oh, hold on. Uh-huh. Yeah.
Yes, like it's good like that.
Okay. So that's the point of interest there. Then it retraced back up here. We didn't get to the point of interest. It didn't get up before it now went down to break structure again.
As price did not get to your point of interest, where did price
It came
react?
down here to break structure.
No, I'm asking, as price did not get to your point of interest, where did it react? And why did it react to that place? That is what you also ask yourself. Because that place is also a valid zone.
Oh,
That place is also a valid. If you look at that bullish guy, this is that bullish guy that also sponsored that
Mimi,
breakups. Yeah? I'm hearing you.
hello?
I'm hearing you. They do, they hear you.